Waterfront properties in Dubai have made people millions in the past decade. But here's the real question nobody's asking in 2026. Is the easy money already gone? Or are we just entering a smarter phase of waterfront investing? Because while everyone is chasing sea views and Instagram sunsets, very few investors understand where the actual value was created, where it still exists, and where it's already priced in. And as always, I'm bringing you the unbiased truth in real estate. So if you appreciate data over hype, hit the thumbs up button, subscribe, and let's get into the video. Before we go any further, let's clarify something. Waterfront in Dubai isn't one thing. It includes natural waterfronts such as creek or the open sea, engineered islands, canal-facing developments, and marina-style master plans. Each behaves very differently in terms of capital appreciation, rental demand, liquidity, and long-term scarcity, which is most important. So the real question isn't aren't waterfront properties really worth it? It's which waterfront, at what price, and what developer. Obviously, this all sounds very high level, but let me tell you what exactly I mean by that. For that, let's have a quick look back. Did Waterfront actually perform? Short answer, yes, massively. But selectively as well. Early Bluewaters Island launches saw entry prices that are nowadays 30 to 60% below resale, which means there was massive upside in there. Dubai Creek Harbour benefited from early launch phases because of the Emaar branding, plus the waterfront scarcity, and of course the amazing sunset views to downtown Dubai. Prime Marina and Palm assets consistently outperformed the inland options over the long-term holding periods. So the key takeaway is that the waterfront properties didn't outperform just because of waterfront alone. It outperformed when location and timing and developer reputation really aligned perfectly. So what are some of the current emerging waterfront projects? First is Dubai Maritime City, or DMC, which is one of the most talked about waterfront zones right now, and for good reason, and I mentioned them in the past as well. So why is it interesting? It's mainly because of the coastal location, very central between the AFC and Jumeirah, limited landmass and direct sea views. The actual frontage, not just the canal. There is an increasing focus on branded, design-led developments, and this is where Omniat entered the picture. Their new Beyond brand in DMC is especially interesting because Omniat usually is known for very high quality, ultra-luxury developments. However, their sub-company Beyond targets a wider audience, but still premium investor base. Design, layouts, and positioning are far above average off-plan stock. This is exactly the kind of waterfront play that still can make sense if pricing and payment plans are aligned. Think about Palm, Jumeirah back in the days, but also open for wider audience. So something if the Palm Jumeirah would actually have apartment buildings and would be priced in line with any kind of inland options. This is also where I'll mention Wim Real Estate, my agency partners who work directly with Beyond and similar development companies, which means better access for better inventory, real launch pricing, the actual one that was announced by the developer, not afterwards or any kind of other inventory, stronger unit selection for you, not just leftovers or anything that they could have found or the developer asked them to push. So if you want that and if you want it in this strategic location of DMC, reach out to Wim Real Estate in the links in the description below, or DM me or reach out to me via email or Instagram, and I'll be more than happy to help you guide through this process. Emaar and waterfront is a proven formula. If there's one combination that historically worked in Dubai, then that's that. Let's talk about Dubai Creek Harbour, for example. So why did Creek Harbour work? Well, basically because it's a master plan community, and that was the plan from day one. They didn't just come up with it after they started building. They had it envisioned from the beginning. Strong infrastructure delivery and, most importantly, clear long-term vision. They knew exactly what's going to happen here. They planned it very much in advance, as like decades in advance, not just years. Even when you go to Vida in Creek Harbour, you can see the master plan of the community with many more buildings that haven't even started construction. Early buyers didn't just buy views, they bought into the ability of what Emaar can actually deliver. And most importantly, the ability to finish what they started. And that matters more than ever today. In a market where offline prices are often inflated, developer credibility becomes a pricing anchor. Another great example is Meraas with the previously mentioned Bluewaters Island. Let's be honest, Bluewaters wasn't cheap even at the launch. Many people said it was overpriced, and many waited for a correction, or people who were just dumping their units and were trying to make their money back. But that was mainly because those people couldn't manage their payment plans, not because they wanted to dump them. So what happened instead? There was strong resale demand also from the actual end users. Lifestyle-driven buyers, they really valued the location, they wanted to be there, they wanted to have that prime first-line access to the sea, and of course there is limited comparable supply. There wasn't really much. There was only the Palm at the time which would compete. Today, Bluewaters trades at a very clear premium, especially for larger layouts or so-called trophy apartments. Corner units are really in demand and would definitely trade at a premium, and full sea views, especially on the higher floors, because Meraas doesn't really build very tall buildings. We know it's really famous for the low-rise buildings. That's why if you get on the top of that building, let's say floor 4 or 5, with a full sea view, and hopefully also you're lucky to get a corner unit, well, you are in for the jackpot. This reinforces a very important rule. Waterfront plus lifestyle plus limited supply beats short-term price sensitivity. Now, if we speak about rental demand, who is actually renting waterfront? Here's something many investors might miss. Waterfront rentals aren't really about tourists or short-term lets, especially if they are done right by those developers such as Emaar or Meraas, who are actually focusing for long-term investors or long-term users. That's why they attract executives, long-term expats, entrepreneurs, work-from-home entrepreneurs, families, and high-income tenants who value lifestyle, not just price per square meter. This means that there will be lower vacancy, much more stability, and most importantly, better tenant quality. If you simply want to park your cash in this kind of investments, I'm not saying you're going to have the highest cash flow yield. However, you're definitely going to have a very high tenant quality, which basically means that you won't have missed checks or missed payments. You will always, most of the cases, get your payments on time, and that's why, of course, entry prices are higher, but tenant stickiness is stronger. So when waterfront does not make any sense, let's balance this. Waterfront investing doesn't work when you overpay at launch, the developer doesn't have any track record, or even a good developer doesn't really have track record of building waterfront. That's also important, because if they only build villas, you're not really sure what to expect from their waterfront apartments. It's kinda obvious, but it isn't. Views are the future waterfront, so you don't really want to look at construction sites in the future, or you don't want to have any other building covering your views. Supply is not limited, is unlimited. There will be a lot of properties and a lot of very similar units, and layouts are generic investor stock, such as in JBC there were plenty of studios and one-bedroom apartments that some of them really performed well, some of them even outperformed, but just because there is too much stock, it's really hard to compete. Waterfront alone does not really justify a premium. Scarcity, usability, and execution usually do. So what's my personal take? Do I think waterfront properties in Dubai still make sense? Yes, but only selectively. If you can combine strong developers such as Meraas, Omniat, Select, and many, many more who actually developed waterfront properties in the past. They have a true waterfront positioning, not just a canal half view or something like that. That doesn't always justify it. Rare unit types such as corner units, larger layouts, because in some of those buildings the percentage of larger units is much smaller, so obviously if there is only 5% all the apartments being 4 bedrooms, then maybe it's more expensive, but it would make more sense because it's more rare. Penthouses, townhouses, especially townhouses and villas, if you combine that with waterfront, it most cases will really work because there is really limited supply in Dubai. And of course, sensible entry pricing. It has to make sense. It has to actually give you that advantage, that incentive to wait for those years until it's constructed to actually be able to either resell with a profit, rent it out and have a pretty good yield, or you can actually move in and live there by yourself. You could generally be sitting on a long-term wealth asset, not just an investment. It could be something that would X2 or X3. You never know. This happened in Palm Jumeirah, so it might happen in other areas. That's where real money is made. And of course, you take the risks for that. Not on mass market 1-bedroom units sold on high, which by the way, that is my strategy. I buy 1-bedrooms in Dubai, but not in the case of waterfront and so on, because those I think should be tackled much more differently, like I described in this video. This is why all strategies really have to be calculated, assessed correctly. And that's exactly where most people and investors need guidance. If you want help structuring the right waterfront investment opportunity, and most importantly, investment strategy, exit strategy as well, honest advice on whether a deal makes sense. You might have it in mind, you might have assessed it already, but you just want a second opinion. I offer one-to-one advisory calls where we will break down everything. Numbers, risks, exits, layout, you name it. And for those who want execution and really want to find a unit at the best price and best deal possible in this market, my fixed fee sourcing service is completely unbiased, no inventory pushing, purely aligned with your goals. You tell me 1.5 million, we will get it under that, guaranteed. Sometimes saving a one bad decision might be more important than chasing that next launch. So waterfront in Dubai isn't dead, it's just grown up and it really evolves differently, more mature. The opportunity is still there, but it now rewards precision, not emotion and hype. If you want more videos like this, you know what to do. I really appreciate you watching it today, and I'll see you in the next one.